How are you doing? I'm going to fly through this tonight. I'm absolutely bloody exhausted. I'm literally just back from doing one of the mountains. So I think I already explained it in another video, but trading is my full-time job, but I only trade Tuesday, Wednesday, Thursday. Friday, Saturday, Sunday, Monday, I'm actually a sponsored YouTuber. I'm sponsored by the North Face, Kawasaki, Insta360, blah, blah, blah. So I was away making content for North Face. I'm literally, and I mean it a second ago, just in the door from getting back from my mountain. I want to smash this out because I'm bloody exhausted and I want to get to my bed. But failing to prepare is preparing to fail, right? And no matter how shitty you feel, you need to get this done before your week starts. You need to plan your trades. Don't just trade whatever you see on the screen. You need to plan them ahead, right? Of course, unless you're a scalp trader, and then you would just trade what you see, okay? So what I'm going to do today is I'm going to run through last week's trades. Then I'm going to run through the fundamentals, and then we're going to have a look at what potential trades we might have for next week. All right. So let's get cracking without any further ado. So we were in oil. This is oil right here. I'll go down to the 4 hour because you can see why. So as oil came down here, actually, and broke this level here, we actually entered oil around here. I think we entered it around here, right? And it just bounced around for like 2 days, 3 days. And what actually happened was in this one, when oil came back up here, I ended up closing it at £3 or $3 in profit, essentially a break-even trade. And I'm glad I did because, look, 2 minutes later it just melted, and that's fine. That can happen. So we're next going to look in, for this area here, retest, reject, and go. As I always mention in the videos, sometimes people are watching this video for the first time. Maybe they didn't watch last week's video. So I'm sorry if you did watch last week's, and sometimes I'm repeating myself, right? It's because I have to take each video as if someone's watching it for the first time, okay? So oil is really sells right now, okay? It's massively sells. There's a load of kind of mixed, confusing data. So when oil gets below $75 a barrel, oil companies are instantly losing money because it costs them $75 per barrel to get oil out the ground, right? So when it's below that, like it is now, they're constantly losing money. When it remains below that for a prolonged amount of time, you will start to see oil rigs shut down. You will start to see oil workers lose their job, and blah, blah, blah. That's what happens. And it also costs oil companies a lot of money to store oil. So when they get it out the ground and they don't sell it, if they just want to store it there, that costs them a fortune as well. So they also don't want to store it, right? They need to try and get rid of it, keep it all fresh and blah, blah, blah. On top of that, we have... last year, China was responsible for buying 70% of the world's oil that was purchased. China bought 70% of that, right? And because Chinese manufacturing is so bad right now and horrendous, use a hammer if you want. It's so horrendous and expected to be just as bad next year. This year, they were only responsible for buying 20% of the oil. And next year, they are forecasted to do the same, okay? So... it's not looking good for oil. The only thing that would be making us look for buys is really if Israel hits Iran. Who the fuck is that? Oi! Right, stop banging about. my wife's been out all day. She just loves coming in when I make videos and just loves being noisy as fuck. Yeah, what the fuck was I saying there? Yes, so the only thing that really makes oil a potential buy is Israel smashing Iran and blah, blah, blah. But it only happens once they've struck, right? And then it'll fly up and then it will come back down. So in an ideal world right now, what we're really looking for in oil is sells, right? But if things kick off with the war, then we want to keep our eyes open for buys, okay? So we're not married to any direction. We're not married to bearish or bullish right now on oil. We are, 60% bearish and that kind of 40% bearish, just holding on. So we did trade that. We did get in here. Excuse me. One of our students also took this sell out, which is a great sell. As soon as it broke this low, he just jumped in and took it down. Fantastic. Well done. Well done, Lovey. And what else? Yeah, we pretty much everyone who took this trade, we got out at break even. So that was fine. The other trade, let's just have a look at GBP CHF. We actually took this multiple times. So in all honesty, if you look on the daily time frame, it looks really bad. Like you really wouldn't want to trade that. That's not typically something that I would trade, guys, in all honesty, right? I traded it because everything was going in the right direction, fundamentals, the what do you call it? The data from the banks and blah blah blah. Sorry if I'm a little bit slow today. I am fucking exhausted. So I took this. Let me just see. I took this one here up, closed out around here as it came back down. I never took that. I can't remember why I didn't, and then obviously went up, and then I never took this. Of course, that was a big, massive news move, right? I can't remember what it was, but it was a news move for pound being weak, blah blah blah. But then pound is now strong again, right? Overall, pound is strong. 1 week news move will give you this type of move, right? But just 1 week news announcement doesn't mean that pound's weak, right? Pound is fucking phenomenal right now, guys. You would not be selling that, right? Um, and that's pretty much it. We didn't take anything else. I did go over this one with the guys. Bang on here. This candle came down here, and we're doing a live because on our Descript channel, if I do any live, if I do any trading, I do it live, right? So when I look through and see what we've got, we did have this. I was tempted to take it. Why didn't I take it? Oh, I didn't take it because we had a mountain of US news coming up, and I'll show you when we do the fundamentals. That's why I didn't take it. All right, but you can see it would have worked out, right? It's not a banging trade, but it would have worked out. It's okay, but it's not a trade to be, oh my god, I can't believe I missed that type of trade. All right, that was pretty much it, guys. I don't think we took anything else. Nah, shit. I would take that. NZD USD. Let's have a look. Nah. NZD CAD. Nope. Okay, so go back to the daily. Now, let's just quickly jump onto the fundamentals because I really want to smash this out, guys. I am exhausted. Where are we? Okay. So for anyone that's, again, new, it's the same thing every single week because all you want to do with habits is build... Fucking hell, I've done it again. All you want to do with trading is build up the habit, right? So what I do is get your notebook out, write trades, or you can write economy, strength, whatever, and then you write down strong, weak, and neutral, right? I'll show you. Strong, weak, then neutral. I know logically, again, if you're new here, logically you're going to say, well, why isn't it strong, neutral, weak? Right? Obviously, neutral goes in the middle. I understand that because what we're going to do is once we go through the fundamentals and we work out which economies are strong, i.e., currencies are strong, which ones are weak, which ones are neutral, you're just going to put a cross through the neutral ones so that you ignore them, you don't look at them. Whichever currencies are strong and weak, you're going to match them up, and that's how you decide what you're going to trade. Some people go, how did that guy know to trade GJ? How did that guy know to trade NZD USD? Well, it's because if it's based on swing trading, of course, and they know fundamentals, you pick a strong economy and you put it against a weak economy. That gives you the trade and it gives you the direction. It tells you, am I looking for buys or am I looking for sells? You might enter, let's say you go into GG, right? You're like, right, GG is 100% buys. You would never fucking sell that in a million years right now. But then you look at GG and all next week it starts coming down like this. You don't enter sells, right? I mean, I'm not talking about scalp traders or blah, blah, blah. I'm talking about my method, right? Long-term swings, you don't enter sells in that point. You just wait for it to come down to an area of value, give you the confirmation of rejection, then you enter it and you ride it all the way back up because that's the higher probability trade, right? If you go into the sell, that can whip back on you at any moment because that's not the real trade. The real trade is the buy, all right? And that's based on fundamentals. So without any further ado, let's crack on. So what did we have? Yeah, last week, let's see what we had last week. Chinese CPI year on year, crap. PPI year on year, awful. US denominated trade balance down. China, look at China's trade balance. Holy shit. China is just in the hot locker right now. M2 money supply year on year is up. New loans. CPI quarter on quarter. New Zealand is up. Right. So don't be Like I always explain, see when that's 0.6 and it's in red, people that don't understand how to read this will look at that and go, oh, that must mean bad, that's negative. It's actually not negative, it's good, it's up. The reason why it's red is because they estimated it to be forecast at 0.7 to come in at 4.7 basically, and it came in less than forecasted. But look what it previously was. It was previously 0.4, so it's actually done quite well. That's actually a good. It's good, that result, right? It's only showed up red because it came in lower than forecasted. So don't get confused with that. Many people just look at the colours and go, "Oh, green must mean good and red must mean bad." No, that's not the case, guys. Okay. What else we got? Anyway, NZD shit anyway. So, um, employment change for Aussie is up. That's very good. They expect it to be lower, and it blasted through expectations, and it blasted through what it previously was. So that's fantastic, because if more people are in jobs, it means more people are making money. If more people are making money, they're not just spending in retail shops, but it means more people can pay their bills. They can pay their rent, they can pay their mortgage, they can pay their car, their fuel, their mobile phone bills, blah, blah, blah. They can pay all these things. Most people around the world live paycheck to paycheck. So if someone loses their job, right? Let's say they lose their job this month, they might be able to pay their bills next month, maybe, right? And after that, they're fucked, right? Most people live that way. I used to live that way, right? I'm not pointing my fingers at anyone here. I used to fucking live that way, paycheck to fucking paycheck. Even when I had 10 grand a month jobs, by the way, I used to fucking live paycheck to paycheck. I just bought better shit. Instead of buying a Ford Focus, I bought a fucking Audi TT. Instead of living in a 2-bedroom flat, I lived in a 5-bedroom fucking bungalow. I just had better shit. I was just as skint at the end of the month because I was a fucking idiot with finances. And we all grow up like that, right? We don't really learn unless we have parents or a circle of friends who can explain how the world really works. Um, so employment change, that's fantastic. It means more people can pay their bills. So when people are unemployed, right, it's not just like, oh, this guy doesn't have a job, so they're not going to buy, retail stuff. It means that after a month, who's going to pay their mortgages? Who's going to pay their credit cards? Who's going to pay their car tick? Their car that's on loan. Who's going to pay their mobile phone bills? Who's going to pay all these things? And you get hundreds of thousands of people, or tens of thousands of people in this case, that default on that, then it just brings the economy right down like a ton of bricks in a very short period of time, right? So that these are the kind of the wider things that you have to think about when you're observing this stuff. Okay. Excuse me. Unemployment rate 4.1, so that's quite sticky. Unemployment rate sticky. That's still good. It's lower than forecasted. It hasn't went up nor down, so that's sticky. That's totally fine. It's so more people aren't unemployed, so that's good. China GDP quarter on year down. See, China's really bad now. When China is doing badly, it has a negative effect on Aussie dollar. So you could say that even though we've got good Aussie news here, it's kind of mixed data because you have to kind of incorporate China in that. The reason is they do mountains of business together. So like when China's manufacturing and everything is through the roof, they get loads of orders and production lines are flowing. They buy all the materials from Australia predominantly, like literally 80% of it from Australia. Um, tin, iron, copper, blah, 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 all comes from us. So when China's not doing well, guess what they're not buying? They're not buying all that shit from Australia. When they're not buying all that shit from Australia, Australia's economy drops, which means their currency becomes weaker, right? That's how it works, guys. It's actually very simple when you start connecting the dots, okay? Industrial production year on year is up, so that's looking a little bit better. Doesn't mean it's strong by any means, but it's a little bit better. Retail sales year on year 3.2, so that's better. So fixed asset investment, unemployment rate in China is coming down. So things are starting to get a little bit better. I've explained it before on a chart graph, right, like this, with the way the markets move. I'm not going to do it tonight, lads, because I'm fucked. But I'll explain it in another video another time, okay? Because I think the last one I done was a while ago, maybe 2-3 months ago. So I will do a new one for you. Let's have a look at what we've got next week. Anything big? Credit card spending year on year. That's quite a big one that we want to see. BRICS Summit. Yeah, BRICS is key. the world's most horrible countries come up with a currency. Yeah, good idea. Flash manufacturing PMI, we want to see that. Flash services PMI. BRICS again, okay. It is good to see what's happening in BRICS, you know, but it's not something you need to flap about. I know many people say, one of our students brought up a good point, and many people think this way, right? Like, oh, that's it, BRICS is going to collapse the US dollar. There's so much more to that. You can't just make a currency out of thin air and decide it's going to collapse the world's number one economy, right? It just doesn't work that way. Many people forget as well, nearly every country around the world is held up by the fucking US dollar in reserves, and they've bought US bonds, they've got US dollar in stock reserves and blah blah blah, right? Because it's it's one of the world's strongest economies, if not the strongest. So it's a massive safe haven, right? For countries to offload all that takes a long, long time, right? Now, number two, guess who stockpiles for safekeeping most of the world's gold? Fucking America, right? So, and France already sent a warship years ago to go and collect their gold when they were a little bit worried, right, about the US dollar tanking. They were like, right, let's go and send a warship to go and collect their gold. I think it's better with us. And when the warship turned up, America told them to go and fuck themselves. And the boat literally about turned and fucked off home to France empty handed. So America has no problem telling countries to fuck off when they try and collect their gold, right? Just because it belongs to that country doesn't mean America's going to give them it back. So there's so many factors involved, right? And the effect of BRICS, it'll take 50 to 100 years. So by the time anything actually happens effect wise, we'll all be fucking dead, right? So I wouldn't worry about BRICS. What else? Yeah, so we don't have. Oh, yeah, we've got a couple of things next week that we want to see. So, in terms of strong, it's a tricky one. It's a trick. Obviously, NZD shit. New Zealand is weak right away. Oz is a tricky one. They've got some decent numbers. Let's have a look. Let's go back 2 weeks just as a refresher, right? There's no harm in doing that when you've got this here. Let's go back another week. How do we get Aussie wise? 6.2. Okay, that's great. 1.6. Official rate with a rate cut. Oh no, sorry, that's NZD. I'm sorry. Inflation expectations. PPI is up. Visitor arrivals was down. It's a hard one. I'm gonna. It is hard. It's not always as clean cut and straightforward. You can't just make it strong because employment changes up. Although that is quite a good thing. I'm gonna. Did I have it strong last week? No, I had it as weak last week. Oh, that's interesting. And China's weak. China's very weak, which does have a massive impact, guys. So you can't dismiss it, right? I'm going to. Where am I going to place it? I'm going to place Aussie dollar in neutral for now until I see next week's numbers. Okay. I'm going to place it in neutral until we see what's going on next week. Let's swiftly move on. Pardon me. Right, so last week, Canadian dollar CPI month on month. Remember, we like to see month on month, but it's not an indicator of the whole economy, right? For that, we really look at year on year. CPI median year on year is sticky, hasn't moved. Trimmed CPI is sticky, hasn't moved. Common CPI is up very slightly. Wholesales month on month are down. Core CPI month on month is up slightly. Housing stats, they're up. See, they're up from before, but less than expected. Manufacturing sales month on month is down. Don't be fooled. This is the opposite. Don't be fooled that that's green, thinking it's good. It's only good. It's only green because they forecasted it to be minus 1.5 and it came in better than forecasted. So they've made it green at minus 1.3. However, if you look at the previous, it was 1.1. So it's taken a massive tank, right? A massive dive. So that's not good. Okay. Let's see what we've got coming up next week. We're going to big news. IPPI. Want to see that? IPPI, IMF, BOC Monday. Yeah, I want to see if they're going to lower rates. BOC rate statement, overnight rate. Yeah, okay, so this is where you're going to see if they lowered rates. Oh, and they're potentially forecasted to lower rates by what, 50 base points. So you need these numbers to come in weak, right? Well, last week's numbers did come in pretty weak and stagnant. So you can only cut rates if everything's coming down. You know, your employment's going up, unemployment's going up, employment's going down, retail sales are going down, PPI is going down. If everything's coming down, you can then cut rates, right? If things are going up, you cannot cut rates because you'll send inflation through the fucking roof, and it's going to be like trying to catch a wild unicorn. It's going to be too hard to try and bring it back down steadily. You can bring it back down after that happens, but you're going to have to bring the country back down with a massive crash, right? And nobody wants that because everybody's going to be in the hurt locker for a long time. That's the kind of situation where people have got, each household, the man and the wife have got 2 jobs each, and they still can't afford to fucking live. You know what I mean? That's the kind of stuff that comes with that. So yeah, potentially massive rate cuts. So yeah, I don't even need to see anymore. Core retail sales, blah blah blah. Yeah. So for me, Canadian dollar is still weak. Their economy is still weak. Moving on. CHF. Sorry. Don't know why we bother checking this because it's always just the same old, isn't it? But PPI month on month down, trade balance up. Next week, what we got? IMF meetings, BRICS. Loads of boring stuff. So yeah, we'll keep an eye on it. For now, CHF. So see, in general, CHF it's always known as a kind of safe haven, right? As if it's strong, but it's strange. Like if I was trading, obviously pound CHF, I would definitely be buying it. I wouldn't be selling it. But then when you look over the long run, it's always a sell, because CHF, the Swiss franc, always has this strength about it. The strength comes from it always being a safe haven currency. It's a risk off currency, whereas pound sterling is a risk on sentiment currency, the same as USD and stuff, right? I'm not going to explain what that is. That's another fucking video on its own. So it is always strong overall. They don't get involved in wars. They don't go poking their nose in other people's business. So it's always a safe haven. For me, I'm going to put it down on paper in the neutral column, but I'm going to keep it in my mind that, obviously, if I was trading it against pound, I'd be looking for buys right now. Okay, if I was trading it against Japanese yen, I think it's CHF Japanese yen, then I'd be looking for buys in that. If it was between CHF and Japanese yen, I'd be looking to buy the CHF. Do you know what I mean? So I need to keep that in mind. But on paper, I'm going to write it under the column of neutral. Okay. Let's have a look. What we got next? Euro. German WPI month on month. French final CPI month on month. Sticky. Bad. Oh, well, it's better than before, actually. But still bad. French CPI month on month. Sticky. What else have we got? Final core CPI. Sticky. Final CPI year on year. Worse. Trade balance. Wow, massively worse. Massively worse. Oh, it's Italian trade balance. Trade balance here. Yep, still worse. Main refinancing rate has dropped. So it's not good for the euro. It's not looking good in my opinion. What is it doing that? Let's see what we've got next week. Is that right? 27th? That can't be right. Oh, is that October 27th? That can't be right. It's only the 20th. There we go. It's this week. Sorry, my bad. German PPI, I want to see that, but it's only month on month, remember. French flash manufacturing PMI. We want to see these flash services, blah blah blah, but we're still expecting it to be very poor. We want to see these for Germany. I mean, I'm still expecting them to be pretty poor. So remember, anything above 50 means bullish anything below 50 means bearish. So, for example, if you look at this one here, right, and last time this news came up, it was 57.4, right? And this time you look at it, and it's 52.9. That does not mean bearish because it's came down. It just simply means things are slowing down in their production or their services, whatever. Things are slowing down. Business isn't going quite well. But as long as it's above 50, it's still bullish, right? You must remember that's very important. And anything but 49.9 and below is bearish. All right. So this is the Eurozone is pretty bearish for now. A bit of mixed data, but it's pretty bearish. Okay. Yeah, so we have got some news we want to see this week. I'm gonna put. I mean, would I class it as weak? Let's see what numbers it gives this week. I'm gonna put Euro, again back in neutral just now. This is probably the most I've ever had neutral, guys. Honestly, markets are absolutely dog shit right now. Like, I'm barely finding a trade for my strategy and setup, right? And that happens, by the way. There's no strategy that's 100% bulletproof, throughout the seasons. Trading is very seasonal, and what you'll get with beginners and amateurs is they'll trade the system, and it might work well for 2 or 3 months, maybe even 6 or 7 months. It works well and make money, and they'll go through this period, right, of trading the same system, but the markets will be really choppy. They maybe don't know fundamentals, so they don't understand why the markets are behaving shit. They'll start having a lot of losses, and they'll be confused, like, why am I having these losses? Because they don't understand the fundamental reason why the markets are being shit. And then what they'll do is they'll start to change their strategy, right? They'll start to Google traders on and jump on YouTube and all that, and they'll just start going through all these different strategies, not realizing that the strategy that's just made them money for the next 6-7 months, it fucking works. It's just that the market conditions aren't quite right for their strategy. So all they should do is really wait, right? Sometimes I haven't placed a single trade in 6 weeks, guys. There's nothing wrong with that. That is perfectly normal, right? The hardest part about trading is not actually trading. It's not fucking trading when there's nothing there. That's the hardest part, right? That's the part most people fail. Moving on. What have we got next? Pound. Pound is a powerhouse right now. Oh, my knees are killing me from that mountain. Right, claimant count change. Well, that's massively up. That's not good. When people are claiming, that means they're usually out of a job, right? Average earnings index is down, so that's actually not that good. Unemployment rate is less, so... Oh, excuse me. Sorry, guys. Unemployment rate is down, so that's positive. CPI year on year is down, so that's not good. Core CPI year on year is down, again, not good. After me just saying pound is a powerhouse. It's typical, isn't it? Stop talking shit, Ryan. PPI output month on month down. So this is probably the move that we got, that big move on pound CHF. It's pulled that big candle down, but overall, this isn't enough to say pound is weak, right? It's just that initial bit of news. It was bad news, so it gave it a bad week. Do you know what I mean? It's not, the pound is not bad overall just now. It's probably one of the best performing. RPI year on year, okay, down. HPI up. Retail sales is down. Okay, so let's see what we've got. Let's see what we've got next week. I know I keep rubbing my face, guys. My moustache is sweating like crazy, and it's driving me nuts. What have we got next week? Any big news? Government Bailey speaks. Flash. Yeah, so we want to see PMI. We've got PMI next week. We want to see that. It's pretty much it. We'll see what else comes. But yeah, we want to see PMI next week. Pound is, even though pound is still strong, guys. It's had a bad week. I'm not changing it from strong. It is definitely still strong for now. you need a lot of news. You need a lot of negativity, and then rate cuts to be like, okay, we're now, we've now flipped to weak. Currencies don't just go from strong to weak. What's that? Okay. Currencies don't just go from strong to weak, right? They need time. Just because a currency has a week of bad news doesn't mean it's weak, all right? Yeah, you really need context of the whole bigger picture. And that's what is the hard part with fundamentals. Nothing is black and white. You don't just, look at one thing and be, oh, that's it. It's absolutely not. That's what makes fundamentals a little bit difficult to grasp initially. So we're good to go there. We are nearly done, guys. Please bear with me. Last week, Japanese yen, revised industrial production month on month, sticky, but I mean it's still shit, it's minus 3.3. Core machinery orders month on month, massively down. Trade balance, down. Territory industry activity, down. National core CPI year on year, down. Okay, so the yen is still fucked. Why does that keep happening? This week, yeah. What we got? Tokyo core CPI, yep, SPPI, yeah, we want to see those. So we've got a couple of bits of news we want to see next week. For me, Japanese yen is weak. Just remember and be very careful, guys. You don't even need to know this, right? But pound yen, Aussie yen, USD yen, Euro yen, you would be buying all these pairs, right? Not selling them. However, you do have to be very careful because the Bank of Japan and the government are openly speaking about intervening, and they've got plans to pump 800 million or 800 billion of bonds back into the system and blah blah blah. So we need to be careful with that, right? Because once they do that, pairs that you'd be buying like pound yen, USD yen, they'll melt. They'll get this like fake strength and they'll just melt. It's because of intervention. It's not because the economy is actually good, right? It's intervention. So you have to be careful with that. I don't want you guys, maybe you'll enter USD Japanese yen buy and then it melts and you're like, oh, fundamentals are a load of shit. They don't work. It's not because of the fundamentals. Fundamentals work, but you need to have context of the whole picture, right? And that's how it works. So, yep, that's weak. Let's move on. Bloody USD. There's always mountains of news with the USD. Right, let's have a quick look, guys, and get this over and done with. Empire State Manufacturing Index down. Import prices down. Core retail sales month on month up. Retail sales month on month up. Unemployment claims down, so that's good. Philly Fed manufacturing up massively. Natural gas, yeah. Crude oil inventories massively down. So is that why did it melt then? -2, but it doesn't make sense why it melted. It's probably just going back down to a better area of value, to be honest. It doesn't make sense why it melted in that case if it's massive down, because that means, look, it was previously 5.8 on the positive side, and now it's -2.2. So that means all the supply has been bought up and some, so it doesn't make sense that it melted. It's probably so. What happens in that case? You think, well, why is it going down then? They're probably just going back down to areas of value. They're probably anticipating the next big move up, and banks will do anything rather than pay too much for what they're getting, right, for the product. So they always want the best value. Hence why areas of value are very, very important. You'll hear other people talk about it as round numbers, right? They always talk about, 7,200, 72,000 or something, or 71,500, 7,150, whatever you want to look at it. They're always round numbers. These are like areas of value and blah, blah, blah. You can tell an area of value as well by using your Fibonacci. 618, 786 are really good areas of value. So USD is strong. That's fucking phenomenal. And I know people keep talking about rate cuts, but like I said, they won't cut rates if numbers keep coming in strong. They need all the numbers to be coming down safely by themselves before they'll cut rates. I'm quite confident there'll be plenty more rate cuts this year for the USD, but if numbers keep coming in strong and going up, they can't cut them because inflation will go fucking nuts. What have we got? Crude oil inventories. We want to see that because we like oil. Unemployment claims, flash manufacturing, services manufacturing. Yeah. core durable goods. Yeah. So there's a lot of news we want to see next week for USD. Okay. So strong. USD is strong for me. And is that us? Are we finished? Yes. Okay. Fantastic. Wait, I'll just set this up again. Okay. So just to summarize, guys, strong pound USD, weak NZD, CAD, Japanese yen, neutral Aussie, CHF, and Euro. Like I said, CHF. People have different opinions on that. Maybe some people have still got Euro as strong. I just like the numbers are a bit meh. I don't put things in strong or weak unless they're stone cold, shit hot numbers or stone cold horrendous numbers. If it's kind of meh in between, I just put it in neutral, and I wait until the numbers come in, they're more geared to one side or the other. All right. That's pretty much it, guys. Let me just check. I don't even know if I can be arsed looking for trades. Do you know that? I'm going to do it tomorrow. I don't trade Mondays anyway, so I'm probably going to do it tomorrow where I can focus more. It's really not a good idea to be doing stuff with trading when you're really not focused. I am absolutely fucking exhausted. I've just spent the weekend. I just smashed a 3,000 meter, not feet, a 3,000 meter mountain with 35 kilos on my back through the jungles of Indonesia. It was horrendous. And then we came down the mountain today. It's like a 5 hour drive to get there, right? We came down the mountain today. I literally ran down the mountain. If you watch my adventure channel, you'll see the content in 2 weeks. I literally ran down the mountain with 35 kilograms on my back. My knees are fucking killing me. And I am totally exhausted because we then had to drive back 5 hours. Okay, so I just didn't want to let this go tonight. If you would like to join our Discord group, we offer a full 3-month trial. As always, you can check it out, you can try us out. And if you don't like it at the end of the month, you just simply cancel. That's it. If you do like it and you wish to stay, because it's a full-blown community, we give signals, we give education, we give one-on-one mentorship. We do live trading sessions where you can physically watch me trade my live accounts. You can ask me any questions. You can copy my trades, blah, blah, blah. We do one-to-ones, the whole shebang. We only charge £97 a month. I do not charge any extra for one-to-ones. I will put as much time into you as you want. All right? And that's it, guys. I hope you have a great week trading. If anything comes up, I will let you know. Arrivederci. Stay safe. Don't overtrade. Don't over risk. Keep your risk at a minimum. What I'll do, not in this video again because I can't be arsed, I'm too tired, but in next week's video, what I'll include at the bottom, down in the description, is I'll include my trading rules, my PDF of my trading rules. You don't have to copy them if you don't want, but at least it gives you an idea of the layout, what kind of stuff that I look for, right? And you could use them if you wish. If you want to take some of it and add your own little spicy sauce, you can do that. It's no problem at all. But at least you have a guide, right? Because many people go, trading rules. I mean, I don't really know where to start. I mean, how do I make trading rules? So I'll give you that guide. I'll put it down below the description. Not this video because I can't be arsed. I'll do it in the next video, right? And what else will I do? I've also typed up a PDF explaining which each news event is responsible for: PPI, PCE, CPI, blah blah blah, and what they do. So you can take that as well for free. You can print it off. You can have it by your computer, and then whenever news is coming up and you're trying to learn it, right? You can just look through. Oh yeah, I remember that's what this is. This is the effect it has. This is why we care. Blah blah blah. And I'll put that in again. Not this video, next week's. All right, guys. I'm Ryan Mack. This is the Trading Guys. Thank you very much for watching. Much love. Have a great week.